It's a directive which was adopted, obviously, at the European level. So we are speaking about, today, 30 member states in which the directive will be applicable. 30, I see you doubting, because after Brexit we should really be with 27. But it's a legal text which is applicable in the European Economic Area, which includes not only the 27 member states of the European Union, but also Iceland, Liechtenstein and Norway are subordinate to the provisions of the new directive, which was adopted last year. It should be included in the general aims of the European Union, and of course there are many objectives of the European Union, but we just focus on two of them which are important for our business. And it's important to remind that all these initiatives, all the directives which we have seen up until now, are to be seen in the framework of these objectives. In the one hand, creating an internal market which the European Union wishes to establish since the early 1950s, in which goods, persons, services and capital can freely circulate from one member state to another. For our business, let's speak about free circulation of vehicles, because that's what it is all about, to enable vehicles to freely circulate from one member state to another. And let's not forget, in a continent like Europe, if you look at that map, we have quite a lot of member states on a small continent. So it's absolutely important that our vehicles can freely circulate in order to develop the economy in our continent. At the same time, we don't want to forget consumer protection. And when we speak about consumer, we're not only thinking about the consumer in the strict sense, the person who paid a premium in order to get a service, an insurance service, but also the person which is behind the steering wheel and who is benefiting from the insurance for the vehicle when he is driving the car, even if he or she did not subscribe the insurance policy. But at the same time, also victim protection. So also the victim, although not really in the pure sense of a consumer, still the victim is, of course, in the first place, worth protecting. And therefore, we also have these directives, which have been adopted between 1972 and 2005. By way of 5 different directives over a period of more than 30 years, different directives have been adopted and became a kind of a complete puzzle with different texts, amending and changing earlier texts, until finally the Commission took the initiative in 2009 to bring these all together in one codified directive, one text which is clear and collects all the different provisions. And then again, we are touching upon this text and amending it again, bringing again A and B and C articles in the text, but there were some amendments necessary and some innovations which were really awaited in the sector. The aim of the directive is, of course, to reduce the disparities, in other words, to bring harmonization in this field of European legislation. And now we have, since November last year, a new text. The new directive, I'm not going to read the title of the directive, but I would just call it the 6th Motor Insurance Directive. Even there you can discuss whether it's the correct term, because already earlier people started speaking about the codified directive as the 6th directive, but since it did not bring any innovations, we prefer to call this new directive of last year the 6th Motor Insurance Directive. More important than the name of the directive is, however, the application of the directive and the implementation into national legislation. What is the timeline? We started with a political agreement which was reached in June last year, and European legislation takes time. So even if there is a political agreement in June 2021, still it took until end of November to formally adopt this text, which was a co-legislation of the 3 main institutions of the European Union, that being the Commission, Parliament, and the Council of the European Union. It was published quite soon afterwards, in the beginning of December, and then, as is usual for European legislation, it entered into force 20 days later, just shortly before Christmas. Entry into force is, however, not the same as full application of the text, because we are speaking here about directive. It's not a regulation. A regulation is directly applicable in the legal order of all of the entire European Union, but a directive, on the other hand, needs to be implemented, needs to be translated into national legislation. Member states, in the first place, have 1.5 years until June of next year to appoint insolvency bodies and protection of visitors insolvency bodies, as they have to be established as a result of the directive. So in June, also here in Ireland, we have to say which body will be responsible to take care of the consequences of the insolvency of an insurance company. And let's hope that it never happens. We have already had enough with Setanta, I think. But this is a first task. And then we have 6 more months to finally implement the entire directive. So by December, by Christmas of next year, the entire directive has to be translated into national Irish legislation. And moreover, once we know all the bodies in the different member states who will be appointed as insolvency bodies, we need to conclude agreements between these bodies in order to make sure that their functioning works well. So all in all, 2 years between last year Christmas and the final, I would not say entry into force, but the final application of the different provisions of the directives in national law. So we are almost halfway. In other words, we really have to work on this implementation into national law. That's the timeline. Now something more about the content of the directive. In other words, now it becomes boring, because now we are really going to look into what has been introduced by the new directive. In the first place, most probably one of the points which was politically most sensitive and on which a lot of lobbying has taken place, very strange in fact. We are working since 1972 with directives on the insurance of motor vehicles. And now, in 2020, 21, 22, it even started in 2017, we are discussing on what is exactly a vehicle. So for 40, 50 years, we have not had really long discussions on what this vehicle should be, because apparently it was clear for everybody. And now, after 50 years, we're questioning, what are we in fact insuring? Of course, with the new types of vehicles, as we see them appearing in our streets, this discussion becomes more and more important. That's the reason why it was politically a little bit sensitive. Politically sensitive in Europe, most of the time that means we reach a compromise. A compromise was found, and compromises mainly also mean, well, everybody is not really very happy, but at least it is acceptable, but it also means most of the time it's complicated. It will not be different for a vehicle. So from now on, a, let's say, mobility device will not be considered as a vehicle as long as the maximum design speed is below 14 kilometers per hour. If the maximum design speed is somewhere between 14 and 25 kilometers per hour, it will only be a vehicle if the net weight of the vehicle, so the net weight, we're not speaking about the person sitting on the vehicle, but the net weight is above 25 kilograms. We don't want to enter into that kind of discussion. So we're speaking about the weight of the vehicle. Everything which goes above 25 kilometers per hour will be considered as a vehicle independent of the weight of the vehicle. Nevertheless, wheelchairs will never be considered as vehicles. That has also been explicitly mentioned now in the definition. Okay, we know what a vehicle is, but we don't insure vehicles as such. We insure the liability which results from the use of a vehicle. Indeed, next question, what's the use of a vehicle? Also, a lot of discussion on that point since 2013. Minister already referred to the jurisprudence of the Court of Justice of the European Union. The Vnuc case in 2013 challenged or triggered a lot of discussion on what is exactly the use of a vehicle. Well, in fact, what the directive has done is they have codified more or less the existing jurisprudence of the Court of Justice of the European Union into the text of the directive, and now in the definition of use of a vehicle, we see that any use will have to be covered when this use is the vehicle's function as a means of transport. Very important. We are going to use our vehicle as a means of transport, and that is something else than using our vehicle as a machine for carrying out work. Those who are a bit acquainted with the jurisprudence of the Court of Justice will recognize the decision in Rodriguez de Andrade, where a herbicide sprayer was used on a vineyard, and the engine was only used to give the necessary energy to use the herbicide sprayer. That was, at that moment, in other words, a machine for carrying out work and not a means of transport. So the accident which was caused by this tractor was not considered as an accident falling under the scope of the directive. So it must be used as a means of transport at the time of the accident. So that's also quite important. It can be a means of transport, but what was exactly the functioning of the vehicle or the mobility device at the time of the accident, irrespective of the characteristics of the vehicle and, importantly, irrespective of the terrain on which it is circulating. That's codification of the Torero jurisprudence of the Court of Justice, where a vehicle was used on a demarcated military terrain. So also that will be covered, and independently whether the vehicle is stationary or in motion. So also a mobility device which is parked in a garage or on the road can be the use of a vehicle if it is characteristic for the use of the device as a means of transport at that time. A lot of discussion and a lot of political lobbying, I think, as regards the scope of the directive as regards motorsport events. They are now excluded from the scope. That's also a compromise which was reached, on the condition that these events take place in a restricted and demarcated area. So no racing on the streets here in Dublin will be excluded from the scope, but when it is an officially organized event in a demarcated area, it can be excluded, but also on condition that there is a special insurance, not only covering the participants, the other participants, but also the spectators of the event. More important, I think, than the derogation for motorsport events are the ones which are included in Article 5. And there, if I may give my personal opinion, I am a little bit unhappy about the new derogations which have been included, because we had already two exclusions in Article 5 of the directive. Certain persons can be excluded. Mainly this is used for state vehicles. State-owned vehicles can be excluded from insurance obligation if there is a body which takes care of any consequences of such accidents by such vehicles. But also certain vehicles may be excluded. This is used in certain member states, for instance, before the adoption of this directive, to exclude e-bikes or to exclude agricultural tractors. Nice to have these two derogations, and they have to be communicated to the European Commission so that it is at all times clear in which member states certain derogations exist. Now, the European legislator has added 3 new categories. Vehicles which are withdrawn and prohibited from use, vehicles which are used exclusively on areas with restricted access. We may perhaps think about golf carts or something like that. And vehicles not admitted for the use on public roads. Vehicles which, for instance, are used only in musea. I doubt whether it's really interesting to add these new categories, because we already had the existing categories and they could perfectly fit in those categories and be communicated to the European Commission. I'm a little bit afraid that this might give rise to new jurisprudence and new unclarity in the European legal order, but we will see what the future will bring. If that gives rise to unclarity, at least we are happy that legal persons will still have some work to do in the future. Insurance checks. I started speaking about the internal market, free circulation of vehicles. And when in 1972, the first motor insurance directive was introduced, in fact, the European Commission built further on an existing system, the green card system, which allowed vehicles to travel from one country to another by showing a green card, and if this green card was found to be valid, you could enter the territory of another country. Very nice system, but once again, in a continent with so many small countries as Europe, if you want today to travel from Amsterdam to Milano, you have to cross the border with Belgium, with Luxembourg, with France. You can even make a small deviation via Germany, Switzerland, before finally ending up in Italy. If at all border crossings you have to search for your green card, turn your window down, and yeah, we are 1972, so probably turn your window down, show your green card, make sure that it is acceptable. If you look at the map and you think about Luxembourg, I'm pretty sure that the 25 kilometers of motor roads that you have to use to cross Luxembourg, they will be full of traffic jams. So that's why in 1972 the green card system was replaced by the system of deemed insurance cover. We presume that every vehicle is correctly insured, even if everybody of us knows that in practice that is not the case, and MIBI knows it better than everybody else, that not every vehicle is insured, but we presume that they are insured, and we are going to consider that a vehicle normally based in a member state is insured and can travel to another member state. If we want that system to work, then of course we have to abolish border checks. So indeed, in Article 4 of the Motor Insurance Directive, it was included, and it is still the case, that you may not perform any border checks and no systematic checks on the insurance status of a vehicle. Nice, but I don't think that MIBI is so happy about this when we cannot systematically control the insurance status of a vehicle. How can we fight against uninsured driving? And what was true for 1972 is not necessarily true for 2022. If today we want to make insurance checks on a systematic basis, we can use means as automatic camera recognition. So therefore, from now on, motor insurance checks are allowed on one condition, and that still goes together with the 1972 principle of free circulation of vehicles, as long as the vehicle is not required to stop. I think this is a nice compromise. So even if I sometimes have doubts about compromises, this is a good solution, I think. The minimum amounts of cover have not tremendously been increased, but they have mainly been harmonized, and definitely the indexation or the revision every 5 years of the maximum amounts or minimum amounts of cover have been harmonized, and that is a very good point. We are speaking here about minimum amounts of cover, so I know that not in all countries the 6,450,000 euro are applicable. I think just like my own country, Belgium, but also France, I think also Ireland is one of the countries where for personal injury you are very close to Walt Disney Buzz Lightyear. Up to infinity and beyond. So unlimited cover, also applicable in a number of countries, but these are at least the minimum amounts of cover which apply in a number of member states. And then we come to an important innovation introduced by the Motor Insurance Directive, and that is the protection of the consequences of the insolvency of an insurance company. Two new articles have been introduced, Article 10A and Article 25A. And as COB, we are quite happy that these are in two separate provisions because they follow the logic and the structure of the existing directive. Today, in Article 10, we have the provision of protection of victims for accidents caused by uninsured and untraced vehicles, and that is on the national level. If it happens in another member state than the member state of residence of the injured party, we are going to Article 24 and 25, where we have compensation bodies. Normally, for such cases, you go to the claims representative, but if you are confronted with a vehicle which is uninsured or untraced, or in case you don't receive an answer from the insurer in time, or there is no claims representative appointed, you can go to the compensation body. They are sitting here in front. You can address a claim to them. The same logic will be followed for insolvencies. Article 10A will deal with insolvencies on the national level, and Article 25A requires member states to appoint protection of visitors insolvency bodies for those cases when an accident is caused in another member state than the member state of the residence of the injured party and caused by a vehicle which is insured, but insured with an insurer who became insolvent. So Article 10A requires insolvency bodies to be appointed. Article 25A requires POV insolvency bodies to be appointed. And if you remember the timeline that I showed in the beginning, this has to be done before the 23rd of June of 2023. So that's the deadline that Europe establishes for these bodies to be established. And then we have 6 more months to to draft agreements and to have them signed by these bodies. What kind of cases are we speaking about? Now it's getting a little bit technical, but just to imagine how complicated sometimes it can get. The most easy case, the most straightforward case, the case which will also happen most frequently, quod plerumque fit. But let's hope that it doesn't happen frequently, but because after all, we are speaking here about insolvencies. Let's avoid that as much as possible. We have an injured party in Ireland. The accident took place here in Ireland, and the vehicle is registered and insured in Ireland. The victim of such an accident can address a claim to the Irish insolvency body, and there it ends. The insolvency body of Ireland will have to compensate the victim, and no recourse will be possible. No recourse. Why would recourse be necessary? Well, in certain cases, it might be necessary that a recourse takes place, especially when insurance companies are acting under freedom of establishment or freedom to provide services. You know that insurance companies can be authorized in one member state and be active in another member state by way of an establishment or just by way of using a website, free provision of services. Imagine an accident in Ireland with an injured party resident in Ireland, a vehicle also registered and insured here in Ireland, but the insurer has his home member state in Sweden. In that case, again, the Irish insolvency body will compensate the Irish victim, but will be able to have recourse against the insolvency body of Sweden, because that's the home member state of the insolvent insurance undertaking. It can, of course, also be that the vehicle causing the accident is not an Irish vehicle, but in our example, a Finnish vehicle, registered and insured in Finland, causing an accident here. Then you would say, well, okay, we have a green card case. Yes, and it is a green card case. So the victim can perfectly go to MIBI in their capacity of Green Card Bureau, but, and by the way, this will continue happening in case of insolvency, so the green card system doesn't care whether the insurer is insolvent or not. The guarantees will continue applying. But apart from the green card system, the victim has the choice also to go, in this case, to the insolvency body of Ireland and get compensation. In that case, the Irish insolvency body will have recourse against the Finnish insolvency body. Does it make a lot of difference? In fact, not so much, because if you use the green card system, MIBI will also turn to the Finnish Green Card Bureau to get recourse. And I will not even try to pronounce the name of the Finnish Green Card Bureau. Let's just keep it with Finnish Green Card Bureau. Article 25A, we are now speaking about situations where an Irish resident is suffering an accident caused by a vehicle insured with an insolvent insurance undertaking in another member state, any other member state but Ireland. Suppose that the accident happens in the Netherlands. We have an Irish resident going on holiday to visit Amsterdam, goes to the Van Gogh Museum, goes to the Rijksmuseum, may perhaps also visit a coffee shop. That's none of my business. He goes to the Netherlands, has an accident there. Most of the cases, the accident will be caused by a vehicle registered and insured in the Netherlands, the Irish victim can return to their home country, can return to Ireland and address a claim, this time not to the insolvency body, but to the protection of visitors insolvency body, so the body established under Article 25A, to get compensation for their damage. Important, however, this time according to Dutch law, most probably, depending on the private international law rules, but in most cases this will be Dutch law which will have to be applied. So that's very important. The POV insolvency body will apply foreign legislation in order to compensate the Irish resident. And then the nice part of the story is the POV insolvency body of Ireland will not be the final debtor of the case, but will have recourse against the Dutch POV insolvency body. Of course, the accident in the Netherlands can also be caused by this same Finnish vehicle, and then the recourse right will not be against the Dutch, but against the Finnish POV insolvency body. And also there, freedom of services or freedom of establishment may be involved. So the accident can be caused in the Netherlands by a Dutch vehicle, but insured with a Swedish insurer active in the Netherlands. Again, the Irish victim can go to the Irish POV insolvency body. Irish POV insolvency body will turn against the home member state of the insurer, which is in this case Sweden. And let's make it completely complicated. Of course, this vehicle from Finland can also be insured with an insurer active in Finland by way of freedom of establishment and have their home country in Sweden. Also there, we just have recourse against the Swedish POV insolvency body. So common to all these situations is that we all go back to the home member state of the insurer. And the reason is quite simple. In the system of freedom of establishment and freedom to provide services, the home member state is there where the supervisory control takes place. It's the home country where the initial authorization to be active in insurance business was given by the supervisory authority of that home country. There, the supervisory control should take place. Also, for insurers' activities in other member states. So it's, in our example, the Dutch supervisory authority which has to have knowledge on the activities of this Dutch insurer in Ireland, in Finland, or in any other country. So in fact, where we say home country control, supervisory authorities, we also say, well, if there is then an insolvency, you must reimburse. And moreover, the directive requires POV insolvency bodies and insolvency bodies to have sufficient funds available to cover these kinds of insolvencies. And in order to have sufficient funds available, you are allowed as insolvency bodies to require or to demand financial contributions on the condition that they are only imposed in the home member state. So we want to avoid, of course, double taxation. A Swedish insurer being active here in Ireland cannot be asked to pay contributions to the insolvency body in Sweden, and at the same time here in Ireland, that will be double taxation. We want to avoid that. So only in the home member state where the control takes place, contributions can be asked. This, of course, complicates the whole claims handling landscape once more. We have already bureaus, we have compensation bodies, guarantee funds. Now again, we have insolvency bodies. You also saw that there is a possible overlap with the green card system. So there is, of course, a danger that there is double handling and, in the worst case, double compensation. Hence, the absolute importance of information exchange. This is what we want to foresee in the insolvency agreements to be concluded between insolvency bodies. Please inform each other. Make sure that everybody is aware that you have received a claim and that you are handling the claim and that you have the intention to compensate the victim so that we don't start paying twice. Information exchange. But also, of course, to inform the injured party where they can address a claim to. There is also an increased protection of the injured party. We already know from the directive since 2003 that a reasoned offer or a reasoned reply must be given within 3 months. This time, the European directive has added that once agreement is reached on the compensation to be paid, the payment must be made within 3 months. This is new. And this also complicates matters because this only goes for payments in the framework of insolvency. It doesn't go, or it's not an obligation in other claims that are handled in cross-border cases. So, once again, a little bit of complication. And, as I said, we have to conclude agreements between these insolvency bodies and between these POV insolvency bodies. As I said, we have 2 years since the entry into force to conclude these agreements. We are almost halfway, so we still have 1 year to conclude the agreements. In Brussels, we have taken a bit of a proactive approach, and we started already preparing these agreements. The drafts are ready. They have been sent to the individual member states, and we hope that we will be able to conclude these agreements on time, because there is a fallback position. If we don't manage to conclude these agreements by December of next year, the European Commission will take action. They have the right in the directive to act by way of delegated acts in order to define the functions of the insolvency bodies and POV insolvency bodies and to deal with the recourse rights of these bodies. We would prefer to do it ourselves in COB framework. We would see it as a little bit as a failure if we have to go to the European Commission and say, well, we've not been able, please act in our place because we were not able to do it. That would be a dreadful situation. So we want to avoid that situation. Some last remarks about other provisions of the directive. Article 15, terrible headache for insurers, compensation bodies, guarantee funds, dispatched vehicles. What are we speaking about? I am today here in Ireland. I see a very nice vehicle in the street which is for sale. I buy a vehicle here in Ireland and I want to bring it back to my home country, to Belgium. The vehicle can continue having the Irish registration plate, but where do I have to insure the vehicle? Article 15 wanted to enable people to buy vehicles in other countries and have them insured in their country of origin. So you could, up until now, buy a vehicle and insure it in the country of destination. Nevertheless, very often when you go to another country, you don't know exactly what vehicle you are going to buy, so it's difficult to have your insurance in your member state of origin. So now, with the new directive, we had hoped that they would do away with this article on dispatched vehicles because it causes more headaches than solutions, but they didn't want to. Now, at least a consumer will now have the possibility either to insure the vehicle in the member state of origin, so in our example, Ireland, or in the member state of destination, in our example, Belgium. And that is of key importance, there will have to be exchange of information between information centers where the vehicle is exactly insured. Because suppose that I travel back with this vehicle from Ireland and I take the boat to Cherbourg and I cause an accident in France, the French Green Card Bureau will, of course, in the first place look into the direction of Ireland and ask MIBI, we have here an Irish registered vehicle, where is it insured? If the MIBI cannot say, I don't find it where it is insured, it will be considered as uninsured, but they don't know that in reality I had insured it in Belgium in the member state of destination. So we really need a good information exchange in order to help victims in these cases. Also a means to help victims, classical accident with a truck and a trailer, you only note down the registration plate of the trailer, you don't note down the registration plate of the truck, was very often a problem because then in many countries it was considered as an unidentified vehicle, even if you had a registration plate. Now the directive says that a claim can be addressed either to the insurer of the truck or of the trailer, and then unfortunately they have added this sentence, where the applicable national law provides for the insurer of the trailer to provide compensation, which I find a little bit strange because in fact a trailer needs to be insured. It is considered as a vehicle in the definition of a vehicle if you look at the definition of vehicle in the directive. So why wouldn't a member state provide for the insurer of the trailer to intervene? But okay, this is the result of the directive. It already is an improvement for victims. Whether it's a full improvement, I don't know. This might be perhaps for the 7th directive to rectify. Claims history statements. I find it so nice here in Dublin, and Guinness is such a good beer that I decide to leave the Belgian beers behind and come and live in Dublin. And I want to buy a vehicle here, live here, and insure my vehicle. But the insurer here in Ireland will not know whether I'm a good driver or a terrible driver by drinking too many Belgian beers. So I would like to know, I would like to inform the insurer here in Ireland of my claims history. So I can ask a claims history statement from my home insurer, and it will perfectly mention that Luk De Baere heeft geen enkel ongeval gehad gedurende de laatste 5 jaren. Very interesting for you as Irish insurers. So what the European Commission wants to work on now is a standardized format of claims history statements so that they can be taken into consideration, and in fact they have to be taken into considerations because insurers will have to show that they do not discriminate between foreign insured persons and Irish insured persons. Moreover, they will have to publish a general overview of policy in respect of the use of claims history statements. Fortunately, they are not saying that you have to publish the way how you calculate premiums, but at least your policy in respect of the use of these claims history statements will have to be published once this is translated into national legislation. There was also a proposal to make it mandatory for insurers to publish price comparison tools. This finally has been changed into a possibility. So member states may impose or may certify tools as price comparison tools, but if they choose to do so, they have to respect certain conditions which can be found in Article 16A of the new directive. And finally, information centers, I told it already earlier, information exchange is of key importance. We also want to know when an insurance policy has been ended for reasons of non-payment of premium or the wrong disclosure of the risk or any other reasons. So also there the information center has to be informed that the insurance policy is no longer in place. And obviously, since we are speaking about information exchange, the European Commission could not do anything else than refer to the General Data Protection Regulation. These are the main changes that have been brought about by the Motor Insurance Directive. I've run slightly over time, for which I apologize, but I hope you have a view on the main innovations. And now we can see how we have to implement them in the Irish market, I think.
Good morning, everyone. My name is Dennis Smith. I'm the Claims Operations Manager with the MIBI. So, and I suppose I just want to say thanks so much to Luke. That was very, very well explained and very good. So, what are the implications for Ireland? So we're currently in that period that Luke outlined, where Ireland, like the other European countries, are working to transpose the MID into Irish legislation. So how does this happen? So transposition is typically done by either primary legislation. So the Road Traffics and Roads Bill, for example, will address e-scooters. This legislation will need to pass through the relevant stages in the Dáil and the Seanad before it finally becomes an act. Or secondary legislation, such as a statutory instrument. So where ministers have delegated power to issue rules or orders if needed to bring Ireland in line with the directive. For example, a statutory instrument was used when the MIBI was designated as information centre for Ireland under the 4th directive. So the MIBI have been regularly engaging with the relevant government stakeholders with a view to supporting and assisting in transposing the directive in an appropriate way from an MIBI and members' perspective, and ultimately to update the MIBI agreement to reflect the transposed directive. Also, throughout August and September, MIBI have engaged with all our members, getting their specific input and feedback on the directive, something to which the departments have been very, very receptive and have actively encouraged. Key areas for consideration in the new directive include Articles 10A and 25A in relation to insolvency. So MIBI continue to engage with the Department of Finance, who are working on the transposition with the support of the Central Bank and other stakeholders. Ireland has until June 2023 to establish or authorise the body or bodies that will deal with compensation when an Irish insurer becomes insolvent. What does this mean? Well, ultimately, the home state of the insolvent entity will be responsible for the final funding of all claims, as Luke highlighted. This is one of the most significant changes from an Irish perspective. Up to now, the ICF levy and missive contributions only took responsibility for policies that were written for the domestic market in Ireland, be it by an insurer in Ireland or on a freedom of service basis. The government will need to carefully consider what insolvency levies, including missive contributions, should be collected on motor business written into Ireland and indeed out of Ireland. There may be implications for insurers writing business under freedom of service out of Ireland, as they may be compelled to contribute to future insolvencies via a new levy. Article 1 deals with the use of a vehicle on public place. The directive confirms the ECJ cases of Vanuk and Rodriguez, adding that there's a requirement for a definition on use of a vehicle. Under the directive, all vehicles will be required to be insured when used as a means of transport. However, it's not possible to exclude claims that took place on private land, Therefore, it's necessary to remove public place from the RTA. However, this definition, with the ECJ cases in mind, will exclude claims where a vehicle is being used as a stationary machine. And yes, the first picture above is in fact a tractor that is being used as a machine and not as a means of transport, and I hope you'll all agree with that. Moving on to e-scooters. These are currently considered mechanically propelled vehicles and are illegal for use in a public place without insurance. However, the Road Traffic and Roads Bill, when passed, will introduce and define a new category of vehicle called Personal Powered Transporters, or PPTs. So PPTs will not require insurance and will be considered similar to push bikes, bicycles. Claims involving vehicles that remain outside the definition of PPT following transposition will still fall under the remit of the MIBI, of course subject to establishing causation and negligence. Article 3 deals with motorsport. So the directive does not apply to use of a vehicle in motorsports events and activities. However, there needs to be alternative insurance in place with equivalent coverage to the directive. If insurance is not in place, it will fall on the MIBI or a similar yet to be established motorsports guarantee fund. In the absence of a specific fund, the as-is, our current guarantee fund, will fund any third-party claims that arise out of these events, but as Luke highlighted, not the competitors or the vehicles involved in them. Articles 5.4 and 5.5 deal with possible derogations for vehicles used exclusively in areas with restricted access and not admitted for use on public roads. If the government chooses to derogate, MIBI would be likely liable for any accidents caused by uninsured derogated vehicles. We recognise, given the nature of these vehicles and significant number of vehicles that have never been registered or insured, the potential for non-compliance and lack of enforcement is significant. MIBI's view, and indeed that of the members, is that in general, Ireland should not derogate in these instances, as the market already provides or will provide products for these vehicles. So, unlike some other member states, airports, for example, are already subject to compulsory insurance requirements of the RTA. So any derogations will ultimately result in motor consumers cross-subsidising accidents caused by these commercial vehicles in areas that generally are not open to the public. Article 13 deals with using a vehicle to deliberately cause injury, which includes motor vehicle terror events. The current position, prior to the implementation of the directive, is clarified in the Mongan judgment. Essentially, the vehicle insurer is responsible, and if there is no insurer, MIBI is responsible. Under the new directive, it is possible to exclude events where a vehicle is used to deliberately injure a third party, including motor terror events, provided there is an equivalent mechanism to compensate in line with the directive. For example, the truck in the picture was the one used in the tragic Nice attacks. So that type of event can be excluded, provided there is an appropriate mechanism in place. The strong view of members, and indeed that of the MIBI, is that the criminal injury compensation scheme is the appropriate mechanism. And the reason being that insurance is intended to cover fortuitous events, not deliberate acts. Therefore, motor insurance consumers shouldn't be called on to deal with these type of events. And we encourage the government to amend the Criminal Injury Compensation Fund to provide compensation to victims on an equal basis to the directive. Thank you very much.
Many thanks to both Dennis and Luke for providing that interesting overview and synopsis of the 6th MID. Now, I know we're just slightly over time, but I would like to open it up to the floor to anybody who would like to ask any questions of Luke and Dennis. There's some roving microphones around, so if you raise your hand, one of my colleagues will come to you. Don't be shy now.
Maybe in the meantime, before the mics go around, Luke, just maybe know a little bit more about the Article 10A and 25A bodies and the agreements. You sort of mentioned there that if we don't get the agreements over the line, what happens? Do you want to maybe elaborate a little bit on that?
Yeah, so the answer is quite clear. There is fortunately a fallback position. European Commission has foreseen, or the legislator has foreseen, that in that case the European Commission steps in and will legislate by way of delegated acts. So they will use these delegated acts to say what will be the functions of the insolvency bodies and the POV insolvency bodies, for as much as they are not yet described in the directive. But they will also deal with the way how the reimbursements between these bodies will take place. And that is the reason why we would like to remain at the steering wheel. So we would like to say how we are going to address these reimbursement payments. We have drafted already the agreements, so we have texts ready by now, and we would really make sure that these can be acceptable for all insolvency bodies, POV insolvency bodies. Now, of course, before knowing whether they are acceptable for all bodies, we have to know which the bodies are, and that is what we are still awaiting right now. Now, in many member states, we have more or less a view on the direction in which it is going, but the quicker we have an official statement of the member states, this will be our insolvency body, this will be our POV insolvency body, we can start the negotiation, we can deliver the agreements, we can ask whether they are acceptable. If certain changes still need to be made, we have the time to work on it right now. If we still have to do that in November of next year, it will be extremely difficult to have it acceptable for everybody. So that's why we have to act now and not wait too much, and avoid in that way that the European Commission will impose rules, because that may be rules with which we are perhaps less happy than when we do it ourselves.
Thanks, Luke. Would anybody else like to raise a question? Over here, there's 2 questions, please. Could someone get a microphone?
Hi. Is it on? You can hear me. This is probably Donal O'Connell, Nolan Farlingoff, Waterford. This is probably for Luke. I'm just wondering, is it envisaged whether these insolvency bodies will process and administer the claims from beginning to end, or will the bodies, delegate the processing of the claims to handling offices, just as the MIBI does?
Very good question, and a question from reality, of course, because contrary to guarantee funds, to compensation bodies, accidents with uninsured drivers, with untraced drivers, you will always have them. And you will always have them on a more or less regular basis. Based on the experience, MIBI can more or less foresee what will happen in 2023, how many cases you have. And that's very unlike with insolvencies. Insolvencies, you are all insurers, it's like a storm. Either you have one or you don't have one. Once you have an insolvency, you know that you have a lot of work. So we cannot allow ourselves, of course, to have insolvency bodies with a group of 25 claims handlers just waiting for an insolvency to happen. If that would be the case, I might consider applying for such a job. So at that moment, action will have to be taken. Of course, in those organizations where it is all a little bit under the same roof, that is, for instance, in the northern countries, Green Card Bureau, Compensation Body, Guarantee Funds, it's all in the same organization, you can handle it a little bit more. But if it's separate organizations, it's quite difficult. So also there on the national level, preparations will have to be made so that you make sure that you can outsource this activity, that you can mandate other claims handling offices or partners, insurance companies or whomever to take up this role. Moreover, I think that this has also been the case in the past with existing insolvencies. For instance, when 10 years ago there was an insolvency in the Netherlands with Ineos, that was what happened, that the guarantee fund at that moment just mandated the claims handlers at that moment to continue dealing with the case, but under their auspices, under their aegis and their responsibility. So ad hoc solutions will have to be found. We have, for instance, also foreseen in the draft agreements that as long as it remains under the responsibility of the POV insolvency body, that a claims representative already dealing with a case can continue doing so. Suppose you have an accident, as I explained, you have an accident in the Netherlands, in another member state. You go to the claims representative, you are in discussion in settling the case, you have already done a lot, you have searched for a lot of proof documents, you have sent them, you are in discussion, then all of a sudden an insolvency runs and the claims representative has to say, okay, sorry, I'm no longer competent, now you may go to the insolvency body and you may collect your proofs again and things like that. It's very frustrating. So therefore we have foreseen that if the claims representative is already handling, the POV insolvency body may mandate this claims representative to continue handling the case, but the game changer is, of course, it will be under the responsibility of the POV insolvency body.